please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
For the first time, this feels like the late 90s when markets won't do anything. We are so used to markets giving us some activity every day. This kind of lethargy is kind of become uncommon. With that preface, let us invite our market master for the morning, Nilesh Shah, Managing Director and CEO of Envision Capital. Good morning, Nilesh. Always a pleasure having you with us in our studio.
Good morning.
Well, I won't talk about the market's static behavior at this point in time. We really want to ask you what you've made of the happenings at Infosys. Has the new management led you to buy the stock at all now?
I think with this event, one uncertainty comes to an end. I think the speed or the alacrity with which the board of Infosys has been able to get in a new CEO, I think it puts an end to that kind of a pause or an uncertainty. And I think the credentials are fantastic. I don't think the board or the shareholders of Infosys could ask for better credentials. So I think that's a huge positive. Of course, we'll have to wait to kind of hear from the new CEO in terms of what his thoughts are, what his plans are. Does he kind of have a vision? So I think we need to wait for that bit of articulation from the new CEO and the new leadership team and how he goes about basically implementing all of that. So unlike the last time around where there was a bout of optimism in terms of the new strategy which the previous CEO had unveiled, this time around I think the markets will have to kind of wait before really they see the results of the new vision or the new strategy. So so that's one, and two is some of the headwinds still remain with the industry. Headwinds in terms of the demand outlook, in terms of pricing challenges, the currency related challenges. These kind of headwinds will remain. So I don't think that things are going to change overnight for the industry or for Infosys specifically. So maybe it's going to be a couple of quarters of wait and watch before one gets a really solid direction in terms of where the company is moving.
Okay, Nilesh, good morning. Overall thoughts on what's happened to the market over the last 2 months or so? Is this more of a emerging market issue that we're dealing with here, or is this India specific, whether it's macros or politics?
Well, it's a bit India specific. And global equities have had a fantastic run, but clearly I think over the last 3 to 4 months, more so post July, we've seen this market consolidate. And of course, we're talking more at the large cap and the Nifty side. I mean, individual stocks, of course, have been very, very different. And some of the stocks have behaved as if the way Bitcoin has been moving in international markets, that every day you see some up move. But otherwise, I think in markets in general have gone through a bit of consolidation, especially in the absence of earnings growth. There's really, it's typically been liquidity which has been providing a huge cushion to the markets. But earnings growth is yet eluding us. And to that extent, I think over the last 4 to 5 months, markets seem to have gone into a consolidation phase.
Okay, well, do the earnings in the second quarter, there were more upgrades, or at least there were fewer downgrades?
Yeah, so I think the earnings have been better versus expectations, but we've yet to step into a double-digit earnings scenario. We're still dealing with high single-digit earnings growth. Yes. But clearly, the markets for the next big up move will have to have, again, a stronger bout of liquidity and or a double-digit earnings growth. And that's something which probably could start off from 2018 itself, the calendar year 2018 itself. So it's quite possible that till that does not happen, markets could remain in this kind of a range.
Okay. Do keep an eye out on the mid caps though. It's not an alarming fall or anything, but it's still down about 0.3%, and the market breadth is now has more than 1,000 stocks on the declining side. So it's not really a very good picture this morning. Nilesh, hi, morning. What are you going to be buying if this market cut deepens?
Well, the way we are positioning ourselves is that we are betting on a very strong earnings recovery in 2018. I think some of the structural reforms which have got introduced over the last year or year and a half will start playing out in terms of the positives. We expect a strong pickup in public investment in infrastructure. Okay. Clearly, we believe that the kind of initiatives which the government or the fiscal sops which the government has extended to housing, we would see that sector also gain a lot of traction. So clearly, the way we look at it is that we expect the core sectors of the economy to do really well from 2018 onwards. And I think in that context, sectors like cement, where there is scope for margin improvement and higher demand, bringing about operating leverage, I think that's clearly one of our favorite sectors at this point of time. The price correction in recent times offers a good entry opportunity. Engineering again is another pack where we're seeing increasing order books with most of the larger players, and companies with strong balance sheets will kind of emerge to be big winners in that space as well. I think at this point of time, consumer one should be a little cautious about, because the valuations are significantly higher valuation, especially consumer appliances as a pack where valuations are trading at 80, 90 times trailing earnings. So I think that's one area where one should be cautioned. Mid-cap IT, I think some of the companies have been able to demonstrate relatively better growth versus the larger players, and the confidence on margins picking up seems to be higher when we interact with some of these managements. So I think clearly all in all, core sectors, cement, engineering, mid-cap IT, and then the recent correction in the banking and financial services space, and I think a little bit more of correction, I think should provide a suitable entry point. So I think across the board, these are some of the sectors which where we would like to kind of position ourselves.
Can you speak a little more about non-bank finance companies? I mean, that's where we saw valuations run huge,
Yes.
you know, 8 times book, 5 times book.
Yes.
I mean, forward.
No, so I think that will continue to be a bit of the trouble spot, the NBFCs per se, because that's where we see some concerns on asset quality starting to play out.
Which is it? I mean, is it consumer finance or housing finance?
I think more of housing finance. We think that the tier 2 housing finance companies are very vulnerable. I'm not quite sure if the credit origination standards of some of these tier 2 housing finance companies have been up to the mark. So there could be some challenges there as asset quality concerns play out. Margins could also come under a bit of pressure with some of the developments there. And I think that in turn could dent the earnings growth. So I think investors have been factoring in a 25-30% earnings growth. There could be a bit of some disappointment there. The space to really look out would be the tier 2 private sector banks. Some of these tier 2 private sector banks have been able to manage their asset quality well and have been able to maintain their margins reasonably well. There is room for them to further improve their CASA. So clearly we are more positive about the tier 2 private sector banks versus standalone NBFCs.
Okay, by the way, just keep an eye on Infosys that's trying to bat for the bulls yet again. Now trading at high point of the morning. Opened a bit soft, but just look at that. For last many days now, there's clear sign of delivery-based buying in Infosys, and that trend seems to be continuing even today while the market is weak. Nilesh, how important is politics now? You know, we're talking about Gujarat elections, of course. In a fortnight from now, we'll have the results, and then next year we have the big ones, and next year will be the last full budget as well. So, how big is that trigger?
Well, I wouldn't be surprised if between 2018 and say the first half of 2019, so clearly the next 12 to 18 months, clearly politics is going to dominate the entire discussion. You're going to see a lot of investors kind of trying to project their outlook based on what they see as potential outcomes. And what it looks like is that the current government seems to be on a very strong wicket, especially in terms of election outcomes. And I think what investors will begin to factor in sometime during the later part of 2018 is that if the government were to vote it back to power, will the government unleash the next wave of the more difficult reforms or not, specifically pertaining to land and labor? I mean, those are really the two very big areas. And apart from that, of course, reforms pertaining to politics, administrative reforms, judicial reforms, those are the slightly more difficult reforms which really have not happened in a significant manner during the first term. And I think a case for re-rating, further re-rating of India could be made based on, if the government were to vote it back for the second term, would it unleash those kind of reforms which could help India to grow at a much faster rate or a higher rate versus the current outlook of 7 to 8%?
More near-term question. Tomorrow we turn 18. TV18 turns 18, and that was one of the reasons why we have invited you. Right. I mean, we've invited our marquee guests over today and the next 2-3 days, because we are celebrating our 18th birthday, which obviously ties in very well with the voting theme we are talking about. You know, the ABP CSDS poll is giving a much lower majority to the BJP. Not that these polls have always materialized, but if it were indeed to materialize in this fashion, will the markets give up some more?
Well, firstly, wishing all of you all a very happy birthday in advance. 18 turns 18 on the eve of 18. So I think on that note, wishing you all the very best. Yes, I think clearly the kind of change in terms of the outcomes, I think will be a bit of a cause of concern. I think what the fresh poll, opinion polls suggest is that at least the government will get a majority. The question is that, of course, the margins will shrink. Our sense is that that will probably just impact the market for maybe just a day or two. Okay. It's not something which will materially change the direction of this market. Because it's a state poll, and finally, you know, for a day or two there'll be discussion, if at all, if that poll outcome turns out to be true, that somewhere the current government has got a lesser number of seats, but nevertheless it will still form the government. So I think it's going to be a non-event, so to say. What will really matter for the markets is basically global liquidity. I think that's going to be very, very important. That in turn will have some kind of an impact even on domestic liquidity in the very, very short term. And two is, of course, as we step into 2018, is there going to be pickup in earnings growth? I think these are the two most important factors which will determine the markets, and not so much the outcome of the Gujarat election.
For now, the market is actually now at the low point, broken 10,100 convincingly. 10,082 is what we have now. Bank Nifty down 116 points. Nilesh, stay on. I just want to know if Ashwani is still with us, because you know he was watching out for this break of 10,100. Ashwani, your thoughts on what's transpired over the last 10 minutes, and are you taking shots here, or is this time to go contra long? Because the last 10 or 15 minutes we've seen a bit of a move downwards towards 10,080 on the Nifty.
So you are now sitting on a 4-day very strong decline. So I don't think this is a good time to go short. I would expect at some time during today or tomorrow for a sharp pullback rally which will clean out the shorts. Because right now, as you see, all sectors are negative. 1,100 stocks are declining, 350 stocks are advancing. This sort of clean out type market generally leads to short covering and fairly decent pullback. So that is what people should position for. Let the market turn before you get long. But my sense is that you could have still a pullback before we go down further.
Okay. Nilesh, what about your thoughts on what the near-term downside could be for this market? Because, we haven't seen a major correction all through this year. In fact, It's been a fabulous year. You think this correction will be shallow as well if it comes through?
Well, that's what it looks like. I think we'd probably see maybe a 4 to 5% kind of a correction. That's really been, the way markets have behaved in the entire 2017. And it's unlikely that it's going to go any different this time as well. This is more in terms of the year-end kind of a profit booking which is happening, or some kind of consolidation which is really happening. So it's very natural that the way the markets have kind of behaved, we could basically see the markets correct maybe 5-6% from the peak. But I don't see any significant correction beyond that, unless of course something goes terribly wrong with global equity markets, and if basically the markets take a slightly more harsher view in terms of either the rate hikes or the Fed tightening the balance sheet. But I think beyond that, I don't see a deeper correction in the markets.
Okay. It's a pleasure having you with us, especially on the eve of our 18th birthday. Thank you very much for your good wishes as well.
Thank you.
Okay, that's Nilesh Shah's view. Not expecting too much of a tremor in the markets, even if the ABP CSDS poll were to actually become a reality. Maybe a talking point, but not a huge reality. But it is our 18th birthday tomorrow, and we are once again celebrating it with a gallery of big guests to speak about the markets. A lot of important developments are taking place in the country around the steel sector. Steel companies are in focus after the ordinance amending the Insolvency and Bankruptcy Code proposes to put restrictions on promoters that have willfully defaulted in participating in the sale of distressed assets. So steel very much in the eye of investor attention. To speak more about the industry, Aruna Sharma, Steel Secretary, joins us now. Good morning, ma'am, and thank you very much for joining us. As I just told you, it's our 18th birthday tomorrow.
Good morning.
And that's one big reason why we have a gallery of big guests like you joining us. Well, first up, your own thoughts about how much of public sector participation will be there in the insolvency process. Will SAIL actively throw its hat in? There are a good 3 or 4 companies that are in the NCLT and up for grabs.
I think that is for each of the steel manufacturers to take it on their own. So they are the ones who are going ahead with it. And I'll be nobody to comment upon it. So it's a situation of for all of us to wait and watch. So let us wait and watch.
Okay. Are you expecting that there will be a lot of foreign buyers? I mean, are there any worries at all about the way in which the NCLT process will pan out? Will it end up in foreign hands? Or, you know, today morning the news is that perhaps the erring promoters will pay up and put their hat in the ring. Will that be a worry?
See, as far as the steel ministry is concerned, our whole focus is that we want to ensure that steel making does not stop, the steel expansion does not stop, and efficient steel making does not stop. Label is not something we are much concerned about, and I'm very sure NCLT will set up a very sound process, because more and more investments are needed in the steel sector in coming years. And this will pave the way for the banks to open up and gain confidence of putting money in the steel sector, whether it is secondary or private players, and even PSUs will need money for their own expansion plans.
So, Ms. Sharma, morning. Can you further that, that discussion for us in terms of what the steel capacity could be for the industry, say over the next 3 years? What are we looking at in terms of a hike from this 120 to 130 million tons currently?
Sure. We are 126 million tons capacity as on date, and we are expecting to reach 150 by year 2020. That is in coming 3 years. Looking at the kind of commitments and the expansion plans which are in the offing by both the integrated bigger steel plants, the secondary sectors, as well as the PSUs. So by 2020, we are very confident we will be touching the figure nearer 150 million tons. And that will be quite linked to the enhancement in the domestic consumption as we are moving ahead on it.
Okay. Just a small point on the MIP. We understand that in stainless steel, some of it is getting circumvented. Have you noticed anything, and will you all be coming with newer rules?
See, we have already made MIP 0 and shifted to anti-dumping, which is completely WTO compliant and which completely follows the trade principles. And wherever circumventing was there, we have issued 3 on the stainless steel, where a lot of circumvention was something which was observed. And we are also watching. So if any evidence comes, definitely within WTO regime, we will take the necessary steps. There is no doubt about it.
Okay. You spoke about this 150 million tons of steel capacity by 2020. I just wanted to understand, in order to keep pace with the higher steel production over the next few years, what kind of increase are we looking at in terms of the iron ore output as well?
See, it goes like this. As we will be enhancing more and more, the use of iron ore per se will not be going in the same geometric proportion. The steel making will change from fines enhanced to beneficiation and pellets, plus the scrap coming. We are eagerly looking forward for as to what is going to happen to end of life policy, which the Ministry of Transport is going to bring with. And scrap will also constitute as a major input as we are moving ahead into it. So it will be a combination of scrap, pellets and iron ore. And India is blessed with enough iron ore, so that will not be an issue at all. Our cause of worry is the coking coal. So coking coal we are going to handle by 3 inputs. One is to improve the technology so that we need less coking coal per ton of steel manufacture. Second, open up the coking coal mines within India and see how we can replace the imports as we are going ahead. And then go for a technology which may not require coking coal at all. So all 3 we are exposing the industry to, and let's see how we head towards it.
Okay, Ms. Sharma, today a trade policy is to be announced, a mid-year trade policy. Is there anything your ministry is looking for in terms of encouraging exports, either in this policy or generally, to push up steel exports?
See, as far as steel is concerned, India itself will be a big domestic consumer, and that's why India is an area of interest for everybody. We are at a low infrastructure levels, so our own domestic consumption is going to be very, very high. The exports will be in the areas where we have an advantage, and imports will be in the area where we still don't have a technology to manufacture it in-house. So that is the combination which is going to work. So in a trade policy for export encouragement, we are not targeting anything specific. In fact, we will continue with 30% of export duty on iron ore, because we strongly believe in value addition and then export. So that is how we are going to agree upon, and that is where we are targeting at.
Okay. But you see iron ore output increasing to keep pace with the output. Any worries on that front?
Sure. No, not at all. Not at all. Whatever is the requirement will be produced. There is absolutely no issue in that.
Okay. The bigger question, since you are in Delhi and you would feel it more, you know, after all, why did China lower its steel output? Because of the terrible pollution problems it created. Is there any move in India to ensure that we don't get to that stage?
Yes, we are a signatory to the Paris Convention. So our steel making will be green. It is a zero waste industry. That is what we are targeting at. There will be absolutely no wastage. The gas will be recycled. There will be a minimal pollution that will be given out. And even the slag, we have found the usage for the slag. Fines which are produced in the mines will be converted into pellets. So there will be absolutely zero wastage as far as steel making in India is concerned, and consciously we are heading towards it. To the pollution problem, what you said, the moment India shifts into steel intensive construction, whatever pollution is caused by debris, by having delayed in the projects, that will also go away. So if the construction is steel oriented, it requires lesser maintenance, 100 years life cycle, whether it's underground, on ground, overground. So that is going to make a lot of difference into the way the pollution is happening because of the small particles and granules which go in the atmosphere.
Okay. Well, you know, I wanted one outlook from you on what the steel demand and the consumption could be over the next, say, 1 year, because a lot of policy measures were taken to protect the steel industry from the threat of cheaper imports. Has that started to make any kind of positive impact? And from that 2.5% growth that we saw last year, in FY18 and 19, what could the growth look like?
What you say is very correct, and that is the area on which we are focusing on. We are also sort of strongly working that more steel is used into our structures, not because we are sitting in steel ministry, but as a country we need structures which are one-time expenditure, which does not require maintenance, and which has longer lives, so that we need not invest in the same infrastructure again and again and again. From 50 to 60 kg per capita, we took 7 years. But from 60 kg to 65 kg, that is 64.8 kg if we talk about it, we have taken only 1.5 years. So that is very encouraging. The steel usage seems to be going up as we are moving ahead. And like I always say, that instead of 1.34 projected population, if I take 1.25 as per the NPR data, we have already reached the consumption of 68 kg per capita, which is very encouraging. And to answer your question, we want to plateau around 160 kg per capita by 2030, because that is something 300 million tons of production, 160 per capita consumption, which comes in absolute numbers to around 270 tons of steel per annum. And that is where India can stabilize and continue to have that kind of operations for decades together, and become the second largest producer of steel in the country.
Well, at any point you think of privatizing SAIL or reducing government stake?
See, it goes like this. Already we have put 3 of their plants. That is Salem with only 51% of the stake, and Durgapur Alloy Steel 100%, as well as Vishwesvaraya 100%. Let's see how it moves. Only then we can talk about others. But having said that, SAIL itself is working hard to bring all their units as profit-making units, and each of their units we will like to declare it as a profit center, so that we are able to exploit upon the advantages which the SAIL PSU has got. And like I said before, let's wait and watch how the outcomes come of the 3 which we have put in the market, and then accordingly we will take a call on how to go ahead about it.
Okay, so if the response is good, you may want to sell even SAIL.
No. I'm not saying anything. You're putting words in my mouth.
No, I asked you.
I'm just saying wait and watch, and
Okay.
let's see. Then we decide.
All right, we'll leave it at that. Thank you very much, Ms. Sharma, for joining us.